JFD, just fair and direct.
Okay, hello and welcome everyone. Welcome to JFD Traders Tea Time with me, Darius Anucauskas. Today's the 5th of March 2021. So yep, welcome everyone. Welcome to this Friday's afternoon session where we're gonna have a very quick look at the markets, a few of the charts, and of course we'll have a look at the data, the US data that came out. So yeah, but before we do that, let's quickly have a read through our risk disclaimer. So the content we produce does not constitute investment advice or investment recommendation, should not be considered as such, and does not in any way constitute an invitation to acquire any financial instrument or product. As always, I'll give you a few seconds to read the rest and we can continue. Okay, so now then, also just before we jump into the charts, quick mentioning of our JFD YouTube channel, to which you can always subscribe to in order not to miss any of our upcoming videos, and of course our JFD Bank website, and specifically our JFD research page, which we also update on a daily basis. So yep, feel free to visit us here on jfdbank.com and click on the research tab right there on the top. So now then, jumping into the charts, the first one I want to pick up here is the German index, the DAX, and looking at this one, it did initially fall lower, but then it recovered somewhat, traveled back to that psychological 14,000 territory, tested it again, and yep, we're seeing another slide. However, the price is currently balancing around the 21-day EMA. So basically, for now, it's kind of a bit of a no man's game here. In a way, we can see that the bulls and the bears are really fighting hard right now. I mean, who's going to take control here? The main thing probably is the fact that we are below this downside line taken from the high of the 8th of February. So we're still kind of struggling to get back above it. And yes, this way kind of it means that we could see the index drifting lower. We already did see that. We saw a bit of a recovery back up here. But now the big question here is, can we drift lower and can we move below and stay below that 21-day EMA? If we do, then the next target is this 13,830 territory that I keep mentioning, a break of which is needed in order to kind of get a little bit more excited with further decline. So yep, for now guys, long story short, for now I'm keeping an eye on this 13,830, and if we get a drop below this, then yes, this could open the door towards a larger correction to the downside, because the reason I'm saying correction is because we're still trading above some of these upside lines here. This one right here, the one drawn from the low of the 11th of December of last year, and the other one is drawn from the low of the 19th of March 2020. So, long story short, keep your eyes on these these levels. For the upside, I need to see this one climbing back above this downside line and staying above it, of course, in order to get excited with higher areas. S&P 500. So yesterday it happened. We've managed to break this medium-term upside support line drawn from the low of the 23rd of March. So guys, this of course kind of creates this more of a bearish atmosphere right now, and of course for obvious reasons. The cash index right now is trading, before the market opened, kind of is trading 3,767 mark, not far basically where it closed yesterday, so we won't have any huge, let's say, gaps here. Yep, I mean, the fact that it's still trading below this upside line here on the cash index, then yes, that of course kind of makes us a little bit more worried that the index could climb higher. Of course it could, but I will get a little bit more excited with that upside, let's say, if we at least push back above the 3,842 territory right here, and then we'll take it from there. For now, I'm leaning a little bit more towards the downside. However, a drop below the 3,755 territory is needed. And the long-awaited non-farm payrolls from the U.S. So those came out, managed to beat the forecast almost double, or actually not almost, but double with a little bit. So the forecast was at 182K. The February non-farm payrolls came out at 379K. So good result there, and the previous figure got adjusted as well. If the previous figure was at 49,000. This one, the adjustment came in at 166,000. Again, good numbers here, and we'll jump into a few instruments, or should I say the dollar index. Actually, let me just jump into the dollar index right now. You can see beautiful move here, positivity kicking in here for the dollar. Good numbers. Unemployment rate dropped to 6.2% from 6.3. So yep, in a way, overall kind of good results here. The dollar is pumping higher here. It's pushing north, and yes, of course, as you probably understand, we'll see some of these pairs falling lower. So but coming back to this, of course, as you remember, this morning I said that my next target is this 200-day EMA, and then we'll take it from there. So for now, I'm kind of leaning a little bit more towards that. The 200-day EMA is currently near the 92.76 territory. So let's see if we can reach that. I doubt that we will reach it today, but maybe something for next next week. And of course, do not exclude a potential idea of this one, where we could see a further push north, but it could stall somewhere halfway here, maybe retrace a little bit. But if it continues to trade above the this upside support line, then yep, there is a good chance for this one to jump, for the bulls to jump in and drive this one higher again. So keep that in mind. Now, jumping into gold, of course, gold is drifting to the downside. Stronger dollar is not helping the gold bulls here. Yep, for now, I mean, I'm not going to spend too much time on this one, because this is what I mentioned. This is what I talked about this morning. Basically, my next target is this 1670 territory, which is the lowest point of June of last year. Around here, we have the upside support line, which is basically taken from the low of the 20th of May. Yeah, I mean, we'll see if the commodity can rebound from this area. But again, let's not rush into anything yet. For now, we're going to go slowly towards that 1670 territory. Well, at least that's going to be my target. For the upside, if we climb back above the 1740 territory, maybe I'll start looking at some higher levels, but to be honest, I would prefer to see a push above the 1760, 64, somewhere around here. At the same time, we could probably get the push above the 21-day EMA, and yep, all this could lead to a larger correction to the upside. Now, jumping into WTI oil, and yep, we just fell shy by a few points, but reached my target, the 65.62 territory. And if you remember, I talked about this one this morning. This is the highest point of 2020. So we've kind of almost managed to reach that. Of course, the day is not finished. Maybe we will even overshoot it, but the fact stays the fact that we've managed to kind of go all the way here. And now, if we look at the weekly candle here, you can see that a nice positive weekly candle here, a decent up move we're seeing here. So in a way, everything's kind of let's say leaning still towards the upside. And yeah, I mean, at the moment we're not really getting that correction signal. If we do overshoot the highest point of 2020, then the next target is this high, the high of let me just double check. Yep, that's the highest point of 2019, and that's roughly around the 66.58 territory. So keep your eyes on that level. It could be an interesting one, but of course, for now, keep your eyes on the highest point of 2020, near the 65.62 territory. Ripple. quick update on Ripple. Well, actually, while I'm on the weekly candle here, still the crypto remains kind of it continues to coil here a little bit, and yep, I mean for now, looking even at the weekly candles here, we can see that they're currently trading above the 21-day EMA, above the 100-day EMA. So in a way, everything's kind of still on the positive side here from the weekly chart. On the weekly chart, on the daily, basically, the idea that I've mentioned previously, that we could see this crypto kind of moving sideways here a little bit, coiling up basically. Still, yes, that's the kind of one of the main ideas. But for now, from the shorter term perspective, I would say that if we get a daily candle staying above the 0.48 territory right here, or should I say actually, yeah, 0.48 territory right here, if we see the daily candle remaining above it, then I'll go for a bit of a move here towards this downside line, taken from the high of the 1st of February. AUD/JPY, so pushing nicely to the downside, and of course, still this area, this barrier, this 83.43 territory continues to provide resistance. Now, if you remember yesterday, I talked about this one, and in the beginning of this week, I also mentioned this pair, and we kept on knocking on the door of this 83.43 territory. We were entering the house, but we were quickly kind of jumping back out at the end of the day, and basically what I was saying, that in order to go for or should I say to get a little bit more excited with higher levels, well, I would like to see that daily candle staying above this area, but we didn't really get that, and yep, that's the result we're having right now here. In a way, I'm not previously I looked at a possible move like this if this barrier continues to hold, but now probably I'm going to shorten this scenario up a little bit. So far this is working out, one part of it is working out, so we're getting that hold up. Now if we now the main kind of idea here could be that we might see a push towards the 21-day EMA. And if we do see a test of that area, we maybe even could test the 81.99 territory right here, or let's round it up towards the 82 zone. So we could see a test of that 82 territory as well. And if we do, and we then see a rebound from here, then basically we could be seeing maybe a possible descending triangle pattern here, which, of course, according to all the TA rules, tends to break to the downside. However, well, we're not going to rush into anything yet. First, let's see if that's going to happen or not. But so far, it seems like that could be the case. USD CAD, so pushing to the upside nicely here. So, and yep, managed to break again this downside line. Currently, it's still trading above this. So let's see how this is going to develop further. But in a way, there is a bit of hope here for the buyers, and we could see this one pushing higher. However, if you remember this morning, I said that I would like to see that daily candle staying above the 1.2738 zone before getting too excited with the upside, and then yes, higher levels could be met. But at the moment, it is how it is. I would suggest to stay cautious and calm for right now. Well, for now. And yep, like I said, because in a way, if it drifts back down and falls back below this downside line, then, well, I mean, maybe the bulls are not really ready to push the pair higher. USD CHF also finding good resistance near the highest point of September of last year, near the 0.9296 territory. Of course, we overshot that, but you can see that I can see that for now the daily candle is struggling to remain above this area. Let's see, of course, how today's day is going to develop, but if it stays like this, then maybe just going into next week, we could see a bit of a corrective move here lower towards the 0.9190, or let's round it up here a little bit, 0.92 territory. If that provides good support, or together with this this upside line here drawn from the low of the 16th of February, then yes, maybe we could see here a push back up. But again, let's not rush into anything yet. For now, all eyes are going to be on this highest point of September near the 0.9296 territory. GBP USD. So, of course, higher dollar is pushing this pair lower, so everything's kind of working according to the plan. Yesterday I talked about GBP USD, and this morning it's also mentioned this one, and yep, we can see that we have pushed lower nicely. So, basically, we managed to reach this level, the 1.3782. So, yep, that's good news for the bears. And in a way, keep your eyes on today's daily candle. If it stays below this 1.3888, then well, we could go maybe for a larger correction going into next week. So let's keep an eye on that one. And Gbp Chf, also something that I mentioned this morning, and look at this beautiful reversal here. I told you this morning to keep an eye on this 1.29 territory, and yep, we were initially slightly above it, but yep, you can see the bears kicked in here, and yep, started pushing this pair lower. I'm not saying that this could go further south. It could. But the fact that we already have kind of dropped quite significantly, I would say, wait for maybe a little retracement at some point here, and then we could maybe start looking at for a larger correction to the downside if the pair stays below this 1.29 zone. If it climbs back above it, then, well, maybe we're not really done with that upside. For now, it's leaning a little bit more towards the downside, so let's see if we can go for a bit of a larger correction to the downside. If you want to be a little bit more maybe on the safe side, what you could do here is keep your eyes on this this upside support line drawn from the low of the 12th of February. And yeah, if that gets broken, then we could see, yep, a larger correction here to the downside. So keep that in mind. Now, jumping into EURUSD, also drifting nicely to the downside. This morning we were still hanging right near this level, near this 1.1952. And what I said was that if we get a break below this, yes, further declines are possible, but if the daily candle stays today here below this area, then, well, I mean, it just increases the chances for EURUSD to move further south, maybe going into next week, where we could target that 200-day EMA, or the area just fractionally below it, near the lowest point of 23rd of November, and that's around the 1.18 zone. So keep that in mind. Keep your eyes on these areas here, and yep, let's see how this is going to play out. For the upside, I need to see a break of this downside line, taken from the high of the 25th of February. And then, yeah, we'll take it from there. And maybe a push above the 1.2023 as well, just to be a little bit more on the safe side, because this would place the rate up back above the 100-day EMA and could increase the pair's chances of moving a little bit further north here. But probably not too much north, because we do have another downside line right here. So keep that in mind. So guys, I hope you found it useful. Thank you very much for watching and listening. I really appreciate your time, guys. If you want to catch my videos on Monday, as always, my Traders Espresso, that's 7 o'clock GMT time. For now, have a wonderful, wonderful weekend. Stay safe, guys, and I'll see you on Monday. Thank you very much, and bye-bye.